What's up, YouTube? Stocks by the numbers. Sorry I wasn't around last week. Had a lot of birthdays and family over. We're going to get right back into it this week. Name of the company I'm looking at, Plug Power Incorporated. Ticker symbol PLUG, listed here on the NASDAQ. Stock right now, $10.80, down about 3 1/3%. Let's see what's going on. Top article says to remove it from your watch list. This company makes fuel cells for electric vehicles, power systems, they say, right? So they're beginning to implement their product, their services in a handful of different industries, and the revenue is growing, but let's see how the numbers look, right? So we have a market cap of about $6.4 billion. The company is losing $1.25 per share. If we look on the EPS side, it has been absolutely dismal for the last 4 quarters. We switch over here quarterly very quickly. You can see good jumps here in the revenue, 160 down to 140 million, and then climbed up 150, 188, 220 million. So the company is making some really good jumps here on the revenue side. However, you can see here on the net income side that they are losing as much, if not more, than they're making. So again, we fall into the DraftKings category that we saw, a couple of months back, where the company was bringing in, a dollar, but it was costing them $1.50 to make that dollar. And as we see, the only way to increase share price with a situation like that is to narrow your losses and maybe beat earnings a couple of quarters in a row. If we see down here, you can see that is the opposite of what Plug Power is doing. Plug Power has their losses widening, and basically they cannot beat earnings to save their life. Going all the way back, there you go, there's a small beat on the revenue side. Small beat again on the revenue side. I mean, 4 beats, excuse me. 5. This company just got overhyped. That's the problem. And of course it happened 2020, 2021, when the rest of them got hyped up. Just like all of the other EV companies, just like, what was the other one? That QuantumScape, remember that? QS? Remember that one, guys? That stock was out like $8 or something. And then everyone's like, oh, what? You make batteries? And they shot the stock up to like $110. I mean, it really is just laughable, right? Because now you have a company, again, $6.4 billion. And if we switch over here annually, they made $700 million last year. And they lost more than they made. So this company is bleeding, and they're trading 9 times yearly revenue. Right? We have a lot of other healthier companies that we looked at here on this channel that should be trading at a higher multiple than this stock is currently trading right now. So the fact that it massively exploded up to this high here of 70 plus and change is ridiculous. And then, of course, we just have a massive pullback now here, holding double digits. I mean, in my opinion, these are the trend lines, basically the highs and the lows from that early 2021. And you can see that chances are it will most likely dip down here to about 9, the low 9s, 9 1/4, and touch this bottom trend line before potentially bouncing back at least to the middle of this range here, which will be about $14, potentially $15 and change. And you can see the fib level right here of $14.92. So that may be where it goes after it drops. But in my opinion, again, I do think it's going to go down before it goes up, as it should. As it should. So again, this company losing more than it's making. Never good for the stock. If we switch over here, we look at the forecast, though, you can see that they're estimating that this company is going to go EPS positive in 2025. And you can see the jumps here in the revenue, sitting here at $700 million last year. Look at that, expecting almost a double, almost a 100% move in revenue, up to $1.3 billion for this year. And then north of 2, north of 3, north of 4 moving forward. So over the next 3, 4, 5 years, they are forecasting much bigger and better things for this stock. And you may want to consider stepping in and being part of it. However, the problem is you probably don't want to do it now, in my opinion. Right? Like I always say, why would I buy a stock here at 10.85 when I could probably buy it at 8.85 or 7.85? So looking at some of the statistics here, we can see trading, excuse me, a little over 9 times sales right now. Stock's trading 1.6 times book value, which is actually the lowest it's been in years. But again, it's justified. It deserves to be down. Looking at these profitability ratios here, you can see it's basically nothing but negativity here. You had big bounces going from over minus 40% here return on assets to as low as minus 11% a couple of years ago. Now it's slid back down to about minus 12.33%. Return on equity, basically same move, climbed up to minus 15%, now pulled back to about minus 16.7%. Return on invested capital was minus 12%, now it's minus 14%. Gross margin percentage was actually positive here for 1, 2, 3 years here, and then just had a massive slide, now sitting at minus 36.5%. Operating margin, it's almost minus 100%. The EBITDA, once again, earnings before interest, taxes, depreciation, amortization, one of our main profitability indicators that we use to determine not only the short term, but of course the long term appreciation of a stock price. And what we're seeing here is the fact that it has just been slipping and sliding for the last 4 or 5 years in a row, now pulling all the way back to minus 87.5%. We looked at the profit margin before. They're losing a little over $1 for every dollar that they're making, so net margin percentage minus 100+%. But again, this is the range that we're seeing since 21. I'm not really seeing any gap ups here, so there aren't many patterns that are catching my eye here, but again, this is basically the range it's been in since the highs, and it has just been slowly bouncing up and down, just decreasing. So if we come here and we potentially call this the apex of the pattern, as you can see on the bottom of the screen, November. So this company, it's probably going to take at least 6 to 12 months, in my opinion, for this company to break this downtrend. But again, the earnings are very important. And, even with your revenue jumping drastically, to come in and miss on the revenue side by over 20%, boom, miss by over 20%. I mean, these last couple of quarters, really aren't anything to write home about. So that is why, again, in my opinion, this can easily come back here to the bottom trend line of about 9 before it takes its bounce and heads back higher into the low teens, potentially mid-teens here, the fib level, 1492. So in my opinion, right now, I wouldn't touch it. However, down the line, we may have something that we may want to own. 1085 here right now, just hugging this bottom Bollinger Band, pulling back. Look at the MACD, just continuously in a downtrend, downslide, as it should be, because this company was tremendously overvalued and just needs to come back to earth. RSI here, 26.5. That's why I'm saying you may have your short-term pop. You could wake up tomorrow and it could be like 1140, and it could have like a 4 or 5% pop on the day. But overall, it is most likely going to continue to pull back and continue to sell off, at least for, I'd say, minimum the next 3 to 6 months. RSI on the weekly here, touch below 36. Touching the bottom Bollinger Band here, does look like the MACD actually just crossed and may continue to slowly pull back downwards. This is why I'm saying, why buy it at 1084 when we can most likely buy it at 884, right? Pricing and timing, and you have to take what the market gives you, right? That's what I always say. Take what the market gives you. So I understand, again, this was a trending name. You may see it on StockTwits when it has a random, 5-6% pop day, and you may want to get involved just because they do batteries there in the EV sector. Trust me when I tell you, it is really not worth it for a company like this. We have to give them some time, and they're coming in, they're posting earnings, what is this, like the first half of May? So, we can come back, we can check these numbers in about 6 weeks and see how the company posted. However, if history tells us anything, they will most likely seriously miss on the EPS side, and they will probably struggle on the revenue side. Look at estimates pulled all the way back to $218.5 million. They were just $280 million, $240. Look at this. So that's the lowest it's been in several quarters, the estimates. So that is actually going to tell us a lot more than you may think, because if they lowered estimates now to 218 million and this company seriously misses and comes in with like 170 million and has another big miss on the revenue side, trust me when I tell you, they're going to destroy the stock. They're going to bring it down to $5. So this is why the earnings are more important than people think. People think it's just some announcement and it doesn't matter because, a pattern is setting up, so it's going to pop or it's going to drop. That is not how it works whatsoever. I have made over 2,000% returns buying naked calls on companies like Disney because they came out with surprise earnings after the first Frozen came out, and that, propelled all of their revenue, to new highs, and the stock like absolutely exploded after earnings, even though it was in a massive downtrend and was even red on that day. I remember specifically. And I said to myself, I said, well, these calls are very cheap, and it's an earnings play, and everyone's betting against Disney. So, it's like Buffett says, sometimes you got to buy when everyone else is fearful. And that's exactly what I did. And the company came out, boom, with a big surprise, 2,000+% those options moved. So in situations like this, there is money, serious money to be made. But again, why buy at 1080 when I can buy down here at, 880? So, if you want to throw this on your watch list, keep an eye on it. That's entirely up to you. But again, I would wait for it to pull back. Look at this right here, like $9 here, right at the bottom of the trend line. You can see this is mid-April, so about 3 weeks from now. And then a month after that, you're going to have the company post earnings. So if you want to wait for this to pull back to this bottom trend line here in the high 8s, low 9s, and position yourself going into next quarter's earnings, I mean, that's entirely your own prerogative. But again, based on what we're seeing with this company throughout the last couple of quarters, I really don't think I'd be a buyer right now. I'd minimum give it 6 to 12 months. Let it run up a little bit. Let me miss a little bit of a rally off of surprise earnings. Because even though that may increase my cost basis moving forward into the stock long term, at least I'll know it's worth paying for, because the company is now bringing in, more and more revenue, and they're narrowing that loss on the EPS side, so it's worth paying a little bit more for. I'm sure that all made sense. So I'm going to leave it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Do me a favor, hit the thumbs up, like the video. That's all the algorithm cares about, so it means a lot to me. And of course, if you like the content, please push the subscribe button. I'm always happy to see the number of subscribers just slowly growing, week after week. It means a lot to me. But moving forward, like I always say, I understand that markets are rocky, they're volatile, they're uncertain. We're up today, banks were failing, so others had to step in and buy them out because they know it's the domino effect like we saw back in '08. If one goes, they all begin to go. That's why as soon as there were problems, all of a sudden these people started coming out of the woodworks. Oh yeah, we'll throw out a bid, or we'll absorb the company. It's not a big deal. So, right here on the financial side, even though it was a little bit hectic, probably nothing to worry about here. But again, I know it's rocky and volatile, so I wish everyone success. I hope everyone makes a couple of dollars. Thanks for stopping by, and I'll see you guys in the next video. Take it easy.